Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. Today's date, September 3rd, and hopefully that weather's starting to break where you are. I've been on the East Coast a little bit, and it was a little nicer back there. Surprisingly, it's not as much humidity. So we'd like to welcome Fayez, BJ, Jose, Rich, Greg, Amanda, Will, and many others. Good morning, good afternoon to you, wherever you are. Now, just real quick as we get started, remember we're talking about trading growth and value. Got a couple areas that I want us to talk about here today. And I think we're going to be really talking about a mixture of growth and value. Okay, we'll talk about kind of what that really means, some metrics to kind of classify whether it's growth or value. And also, as we get started, I want to give us a quick reminder that the information we talk about here today is for general informational purposes only, should not be considered individualized recommendations or endorsements of any particular security, chart pattern, or investment strategy. So in other words, you get to decide if it's something you would consider for yourself. Also remember that Schwab does not recommend the use of technical analysis as a sole means of research. There's other types of research that's just as interesting as technical analysis as well. And we all have our favorite type of analysis. It's really fun when you can kind of use different types of analysis to kind of create an investing idea, okay? And that's what we try to do here in this class. Now also remember that our examples that we do will be done in the Paper Money software application, and we're going to do that for educational purposes only. Also remember that when we talk about dividend stocks, there's risk with those dividend stocks that they may reduce or stop paying dividends. So it's not like a bond or a fixed income product, right, where they have to pay. That's up to the company to decide if they want to continue to pay the dividend and if they want to cut it or raise it and so on. So that's a risk with dividend stocks. And also remember that when we talk about investing, it involves risk, including loss of principal. Today, we're going to talk really about kind of where the market is. I want to kind of do some fast fire initially when we look at the indexes and sectors. I don't want to take a lot of time there because I got kind of an area or two that I want to kind of talk about technically and fundamentally. So let's kind of just take, 3-4 minutes, talk about where the markets are. And let's also kind of, when we talk about the markets, let's kind of be very objective. I think a lot of times we talk about bullish, and it's been right to talk about bullish because it's been bullish. But I think there's also a time to kind of say, well, when is it not bullish? Okay, and I think that's very important. And with that, I want to hop right in. I want to kind of show you something. So if we looked at this, now remember I kind of said yesterday that what the investor is really trying to focus on, or at least some investors, is they're trying to get it where these moving averages are green. There's a green shade, right? You get a green shade when the short-term moving average is above the 20. Well, if we're completely fair, which we want to be, we don't have the green shading, right? We have the red shading, and that's just the opposite of what's the green shading, which is the shorter-term moving average dropping below the 20. So if we were just being brutally honest and not smearing everything bullish, we'd have to say, come to at least a conclusion that currently right now the Dow has some negative momentum. We said yesterday that when the price breaks the diagonal line, okay, there's a line that we drew from yesterday. We've broken support and we've made a lower low. What tends to come after a lower low? Well, you tend to get a lower high. Well, remember when we kind of talked about the up days, or I should say this, that when we get an upward trending market, if that pullback in the upward trending market is less than 3 days, very strong upward trend. Well, let's take the flip of that. What happens if we're not in upward trend in the short term? And the upward movement only lasts 1 to 3 days before the red candles come in again. We are seeing the complete flip of what we would normally see when the market is bullish. Does that make sense? So when we broke support, we made a lower low. If you make a low low, the highest probability is a lower high. And the big thing is if we can't get more green candles in, let's say, 3 days or so, and those 3 candles are not even above the old support, new level resistance, you're kind of still more in a pullback phase. So I want to kind of point this out. If we have that red shading as just a quick synopsis of what we just said longer, stretched it out, it's kind of telling us we don't have bullish momentum right now, okay? Now, the number one goal is to make money. No, that's not the number one goal. For many investors, the number one goal is to protect the capital, right? The second goal might be trying to increase the probability of benefiting financially in the paid money account, right? So the biggest actually thing is here is, at least on the Dow, we don't have shorter term bullish momentum, at least right now. Now, that does not mean everything is down, but we're probably going to see a majority. Now, what is the majority? We're going to say 2/3-ish. Probably stocks are kind of pulling back. Now, if you like to trade, let's say, bearish positions, shorter term, you might have some opportunities. Now, if you said, James, I only do bullish things only, well, probably going to need to look for some outliers. Now, what I'm going to do is I'm going to fast forward. When you look at, let's say, the SPX, is it any different? No. You actually kind of see the crossover. Now, remember we kind of count to 3, 1, 2, 3? Well, this is 1, 2, 3 in the bear sense. 1, 2, and then 3. If we cross here, okay, we would be getting more of the confirmation of selling off. Now, if you go back and look at this and say, is it really intermediate bearish? That's tough, okay? It's kind of just more sideways, okay? But nevertheless, we're kind of seeing the pullback. And I think we could just do the opposite of what we do in terms of being bullish. Russell, just real quick, if we look at that and say, where are we at there? Well, you really have 1, which is red, and then 2, which is the crossover, and the 20-period moving average is not gone red yet. Nevertheless, if you look at this and say, well, the price is below the moving averages, right? Well, geez, that's not something we normally talk about, buying stocks below their moving averages. I mean, that just seems like, wow, it makes me want to itch. I mean, we don't normally talk about that. And we don't, because we're looking for stocks above the moving averages. So we're also kind of pausing a little bit. Now, the question is it shorter term bearish or is it intermediate? So when I say shorter term, I'm saying 2 to 3 days to 2 to 3 weeks. If I said intermediate, 2 to 3 weeks to 2 to 3 months. If we kind of said intermediate, we're still bullish. It's just in the shorter term, we're dropping. Now, here's what we need to understand about moving averages. They're great, but they can actually have kind of a downside to them. If we're in a channel, whether we're like on the S&P 500 or the Russell 2000, the channels are, the moving averages, they're going to tend to be late. When you look at the SPX, when you look at the Russell, they're kind of more like channel type setups. So when you can identify a horizontal channel or a Russell channel on the diagonal channel on the Russell, the investor might say, yeah, I like moving averages, but if those channel widths are pretty narrow, the investor might just be trading the lines of support and resistance. That's an important point to understand. Now, we haven't had a whole lot of that, okay? There's just been trends and trends and trends. But this goes back to old school trading, buy low, sell high, and the investor is kind of using the lines as potential entries, the resistance lines as a potential exits, and their understanding of the moving averages, they're not a one-day moving average, okay? So they're going to be late or later. They're going to be more of a confirmation. Now, the other thing is I'm going to pull up just real quick. If I were to ask you a question, which sector broke out to an upside, broke out to a brand new high here today, we would have to say, and again, I'm just going to look at the list. Now, remember, if you look at, let's say, the list of sectors. Now, again, we use the GC, gold, as a proxy. We're going to call it the precious metal sector. There is no precious metal sector. Well, I know maybe for the industry, right? But we can call it what we want, okay? We're people too. We can choose what we want to look at. And so what you're now going to notice is the IXC, which is what? That's communication, right? Name any stocks that are in communication. What stock hit a brand new high? I'll give you a hint. You can buy a vowel, O, and then give me the rest. So you're going to now see that hit a brand new 20-day high today, hit a 55-day high as well. You're also going to see, if you look at precious metals, you're going to see that if you look at that, that's a brand new high, that's a brand new high. So two sectors actually here, if we include precious metal sector as a proxy of gold, those actually hit a brand new high, okay? Now, when we actually look at something else and kind of say, is there anything else in the last week that's holding a little bit of strength? So sometimes when the market pulls back, you're kind of wondering, if the market pulls back, most things pull back. But the question now becomes is maybe what is pulled back, maybe not as much in the last week. Well, let's look at it. I think we have to at least kind of keep an eye on healthcare. It hasn't pulled back that much. The second one that hasn't pulled back that much is financials. It's like par or slightly down. Now, I know that kind of goes against a lot of people because they're like, but it's flat. But you don't understand. If the market pulls back and these are neutral, they're showing some what? Relative strength. Okay? So now what I want to do is let's keep this in mind. Now, I do want to go back to one thing. So when we kind of do the due diligence, right? When we take a look at these, there we go. One thing I do want to point out here, and normally I thought it was there, but we're going to bring it up here anyway. We're going to bring up TNX CGI. There it is. Let me kind of move this over. There it is. Now, one of the things, first off, what is that, right? That's the 10-year yield, okay? Now, if we take a look at this, we go back, type this in, TNX CGI, you're going to see that it's called the interest rate 10-year note, and you're going to notice that it's going to say 42.11, but if you move the decimal over, okay, it's really 4.21. Now, why are we looking at this chart? Now, there are some industries that can benefit or be hurt by rates going up. Now, we've been talking about for weeks now, months, is the Fed finally going to cut rates? Okay. Well, if we go back and really take a look at this, we kind of have like a descending triangle going on the 10-year note. Now, if we were to break down, are there any areas that might benefit from that? Now, by the way, if rates fall down, you know, some areas, maybe like real estate might go up, maybe properties in general. It could be home builders. It also might be many stocks or sectors in general. Usually if the rates actually fall, it actually can push stocks up. In other words, a cheaper potential form of financing, okay? Cheaper form of financing, higher potential margins, okay? Now, I want us to kind of keep an eye on this because if I could, I'd like to bring up a home builder product that tracks a group of home builders. Now, I'm just going to give you a little hint here. If I pulled up one of them and I just said, hey, I wonder maybe, now you tell me, okay? If I said any home builders, what would you say? Like what type of home builders? Okay. Now, we could say maybe like Lennar. We could say what? Toll, right? DHI was a DR Horton, right? Couple of these stocks. Now, what you're going to notice is, remember I said the comment, when the market pulls back, you got to ask yourself which areas have not pulled back as much as the market. So this is why when we actually looked at that list of sectors, this is why we put the SPX in the list, because we're asking ourselves on a 1 week performance, which sectors have not pulled back as far down as the S&P 500. So as this loads here, what you're now going to notice is we're watching the SPX and we're saying, look, in the last 1 week, what was the performance in the last 1 week of the SPX? Now, this is kind of funny, okay? Because a lot of times when the market falls, it's almost like, oh my gosh, the Great Depression, all right, in the short term. But if you go back and look at the SPX, it was only down 0.25% for the week. But if you talk to a friend, you would have thought the market crashed, okay? It's kind of funny when you look at the numbers, how different it is than the emotion. Don't talk logic, okay? I hate when you do that. Now, here's the deal. So this is the cutoff. That's the benchmark. Any sector that was actually worse than that, it underperformed. Any sector that it's actually above that, outperformed. That's all we're looking at. Now, does that mean we can't look at stocks? Does that mean we can't look at utilities? You could. It's just they're underperforming, okay? Now, when we take a look at this, we will take a look at some of these financials, but I'm going to include home builders, okay? Now, one thing I'm going to do is if I pulled up just real quick, let's go to this just real quick. I'm going to start with just real quick. Let's take a look at a couple first, okay? When we look at, let's say, a stock like PulteGroup, okay? kind of more of like an upward trend. I want to kind of take a look at these just real quick. Toll Brothers, okay? That's the luxury home builder. My wife is always pressuring me saying, when are we moving? Okay. What's wrong with our current house? Okay. Now, a little fun with that. Now, if we take a look at this DHI, okay. Now, the reason, when I look at these two stocks, right, the DHI there, and I'm kind of looking at, let's say, are there gaps in here? Are there channels in here? I don't know what you see, but that kind of looks like some channels in there. So what's my point? Well, my point is, if it breaks that level, could it try to go to the next level, okay? DHI, that might be one that we might come back to. Now, if we kind of said, well, if we're talking about an upward trend, okay, we go back and really take a look at this, there's really that upward trend about right there. I mean, we're just kind of making higher lows. We can see the higher lows because those green dots on the bottom have been screaming higher low, higher low, higher low, higher low. Good God, this makes me feel bad. Like, it's just saying higher low, higher low, higher low, higher low, higher low. It's been saying higher low. You ever look at a chart and say, man, I can't believe I missed that? I mean, welcome to the market, okay? This is why people kind of focus on maybe a fewer stocks than maybe other people. But if you look at DHI, that's one that we're going to kind of target here, and maybe a little Toll Brothers. Now, it's seeing the same type of idea. Now, if you're not a daily chart person, you might say, well, if I look at this on the 3-year weekly, are we seeing the exact same thing? Yeah. Okay, same idea. Now, again, if you're a weekly person, nothing wrong with that. You just might kind of be looking for that kind of the green shading, right? Now, I know you're thinking, I just need 10 of these, okay? Join the crew. Now, if we take a look at this, I'm going to focus a little bit on, I'm going to start with Toll Home Builders first. Now, let's kind of just talk about this just real quick fundamentally, okay? Now, when we talk about the chart, we're talking about technical analysis, right? We're looking at price and volume and momentum and support and resistance and so on. We talk about the fundamentals, we're talking about like revenue, earnings per share, dividends, right? We're looking at certain ratios, okay? Whether we look at technical analysis or fundamental analysis, it doesn't matter. We're just looking at what it's done historically up to today, okay? Now, an analyst would actually, they would try to figure out what the earnings and the revenue might be, and they might forecast the numbers, okay, in the future. We don't even go there, okay? So just like in technical analysis, we don't know what's going to happen on the right edge. And just with fundamental analysis, all we can do is look at the recent data, okay? We're not forecasting any metrics going forward. We're just looking at the history. That's a huge difference. Now, when you look at Toll Brothers, you're actually going to notice that they actually do, let's say, luxury home building. Now, I don't know if now what's luxury, okay? I don't know. I think most people, if you say luxury, might be $1.5 million, okay? Sad to say that $1 million, not necessarily luxury, okay? I mean, it's nice, but luxury might be $1.5 million. Luxury is always maybe the step above that maybe I don't have or you don't have. That's kind of funny. You should laugh at that. But the biggest actually thing is maybe, I don't know, $1.5 million, 2 million, 2.5, whatever, okay? Now, here's what we got to kind of take with a grain of salt. Back in 2020, we got to remember where were house prices, right? Well, house prices, let's say a decent house might have been, I don't know, 500, 600, 700,000, right? Well, let's say they sold 100 units of that or 100 homes, and the revenue, the sales per share was X amount. Well, the very next year, where did home prices go? They went up in most parts of the country. So they sell the same 100 homes, hypothetically, but they sell them for a higher amount, okay? And sales is higher. Well, no kidding. The price was higher. And so this is where we have to take it with a grain of salt. If the house actually value goes up that they sell it for, and they're doing the same number of units of homes sold, the sales should go up, okay? Now that's kind of Captain Obvious, but I just want to make sure we're clear on that. Now the question that really becomes is, are they able to kind of make earnings from that? And what you're now going to notice is the earnings per share has actually been quite healthy. 346, 663, 1090, 1236, 1501. Now, so why does that matter? Well, for some investors, if you like to trade growth, the investor might say, I'd like to see those numbers double-digit percent year over year. Second, if actually those earnings per share are increasing, does the company actually pay a dividend? Now, really figuring out really what the year over year growth is not that complicated, okay? All you're doing is you're taking these two numbers, that number and that number, and it's just gonna, if you do, let's say -1, it's gonna give you a percent. I'll go -1, okay? So if I took 1501 divided by 1236, it's gonna give us 1.21 or 121%. Well, it's not 121%, we gotta subtract 1, and it gets us down to the earnings per share growth year over year, 21%. Now, guys and gals, that's not a lightweight number, okay? If we're talking about things that are more like income or value stocks, they might be 3%, 5%, maybe 8%. You start getting 10% on earnings per share revenue, you're not talking about a value and income stock typically, okay? Now, if we take a look at this, so we're kind of looking at more of a growth snapback, okay? Now, if we look at, let's say, Toll Brothers, what we're going to do is we're going to right-click on the chart. Let's put this in the paper money account. And what I'm going to do is I'm going to go to, I'm going to use that. And what I'm going to do here, and if you don't mind, I'm going to kind of go back to the candles here, the trend candles for just a moment, okay? Now, if you look at this chart is a little different than what we've been using. Some people like to use both. I'm a fan, okay? Now, what you're now going to notice is we're going to right-click on the chart, okay? Now, remember, the color of the candles coincide with the type of trend that it currently is, given the criteria, okay? Now, if we take a look at this, what you're now going to notice is we're going to buy in the paid money account X amount number of shares. We'll look at that in just a sec. The current price, if we look at this, is about 140.32. And if we actually said, well, where do we see any levels of resistance above us? If we went to the horizontal resistance, if it kind of goes back inside this channel, some investors like to trade channels, okay? It's probably going to be, if it does go to that top, we don't know, we're going to target that, 158. Now, if I go limit dated GTC, this is just saying sell if it gets to this price or higher. The investor doesn't have to be there, but if it goes up there intraday, etc., this is in the normal market hours, right? From 9:30 to 4 p.m. Eastern. If it goes to that price or higher, it's going to sell the stock. It could be at a higher level if it can be there. Now, when we actually go back and kind of say, well, what about the, let's say, support? I think the support is probably pretty clear. You could almost kind of connect the dots. This is kind of what's nice about these Cajole dots. Sometimes these can really be like horizontal supports or diagonal supports. And if I said I kind of see a diagonal support at 134.90, it's really good. That's a diagonal line. And I kind of like that. I mean, I know I've seen this before, but sometimes you just connect those dots, right? And there's your little trend line. 132.20, okay? 132.20. Now, if we go to dated GTC, there it is. So we got a target. DHI, DR Horton, and Toll, they're kind of more channel trades. The thinking is, if they can break the channel, can they go to the top of the channel? Now, over the next couple of days, maybe weeks, the investor is probably saying, geez, I sure hope that actually the Fed actually cuts the rates and actually more investors start to pile in some of these interest rate sensitive areas. Now, when we talk about interest rate sensitive areas, it's not just home building. It can be tech stocks, consumer discretionary stocks. Those could benefit. It could also be real estate, which is wide. Like what type of real estate, okay? But it could also be home builders in general. Now, we take a look at this, got a target, stop. Now, also remember what we're going to do is going to come down to the position size. We're going to take that same position size we've been working on, and that's going to be really about 46 shares. Take the 46 shares. There it is, okay? Joe says, how do you get those dots to show up? Let me show you how to do that. So what I'm going to do is confirm and send. and here's our order. Now, here's the thing. Err on the side of doing a lot of practice, okay? I think a lot of times the investor wants to be good, but they don't practice enough. You should be doing a minimum 2 to 3 trades a week to really become proficient with the strategy and practicing entries and exits, position sizing, and so on in the paper money account. Now, remember, with the stop orders, there's no guarantee the execution price. What it fills at will be equal to or near the activation price. If you say, I don't know what the activation price is, the activation price is the stop price, okay? What the execution price is, that's what it fills at. Send the order. Go back to the question, which is, how do I get the dots to show up on the chart? Let me put this right in the chat. We got Barbara Armstrong with us in the chat, and she mentioned that, but let me show you as well. So I sent the script to you in the chat. You can also, with that script now, you can go up to the very tippy top, go to Setup, go to Open Shared Item. Okay, so that's not too bad, right? Go to Setup, Open Shared Item, not too bad. Okay, and once we do that, just copy and paste. So that script that you actually see in the chat, that's, I just copying and pasting it in. How do we get there? Go to the very top right, go to Setup, Open Shared Item, copy and paste. Let's go to Preview and then import that. Now, Joe is the one that asked that, and what happens is it comes up with a smaller chart. If Joe says, I want to put that on my side, okay, all you got to do is just go to Style and then just save the style. And if we say Save Style, we're just going to type Joe, okay? Now, if I do that, save it, go back to Style again, Load Style, I'm expecting there's going to be a Joe there, and there it is, okay? So just remember, Style is where you can save it and then recall other different types of charts that you like to look at. And there's reasons why to look at different charts, okay? I've seen historically where people have so much stuff on the charts, I don't even know what's going on, okay? I don't want that. I want to kind of look at something that's organized and something, why am I looking at this chart? So the purpose of looking at this chart is to see the whole dots, yes, but it's also to see kind of what type of trend are we in. And remember, the paper money account is trying to look at stocks that really kind of are more in that trend 3 condition. That is not guaranteeing that it's going to do that tomorrow, okay, or the next day after that. But we're looking for stocks that have had recent patterns of short and shallow pullbacks. How do you know they're short and shallow pullbacks? Well, because if we get these orange or purple color candles, then followed by green candles, that's your shallow pullback. Shallowest pullback would be an orange color candle by itself. If we had an orange/purple color candle, a little bit deeper pullback, but still not that deep of a pullback, okay? Now, if you say, I don't know what the color differences are, just go right to that little test tube right there. You can click on the trend script there, and it's going to give you a whole readout that we talked about yesterday of like what those colors are actually telling us about the trend. Now, just real quick, I'm going to go back. I'm going to come back to DHI, but the one thing you're going to notice on DHI, I'm going to come back to that in just a moment because I want to look at some other names, okay? But let's hold this thought on DHI, okay? Now, the one that I just want to re-mention just briefly that did go to the top of the channel today that targeted out was United Airlines. Of course, the Chicago people, okay, probably had targets there, hypothetically. And what you're now going to notice is it kind of went up to the top of the channel and then just sold off miraculously. Or was it people had a target, sold it when it got to the top and it fell back down? UAL kind of still grinding to the upside, albeit that someone, confess who, if you know those people, someone sold right at the horizontal today. So that's why people look at these lines. Now, the other one that kind of got a little push was Delta, which was kind of right there. Now, it's like we saw with UAL, it faded back some, but this is also another one we're going to kind of keep an eye on that is at the bottom of the channel. So if we said between UAL, DAL, who is closer to the bottom of the channel, maybe for an entry potential setup, it's DAL, Delta is, okay? Now, if we went back just to real quick, Alaska, what you're now going to notice is for those of you on the West Coast, you're like, you always leave Alaska out. We always feel left out. Well, you're going to notice that that one has not been too shabby either, okay? And that one, what you're going to notice is it's kind of just grinding away to the upside, okay? And if you go back and really look at these old highs, just kind of taking them out one by one here a little bit. So I think if we kind of said, now obviously UAL tends to be a leader recently. DAL and Alaska, keep an eye on those. Love, okay, kind of just still trailing, struggling to kind of get into that open territory to the upside. Struggle, okay? We're going to keep an eye on Delta and Alaska, but UAL did target out here today. Now, I want to go back to just real quick FCX. What is FCX? Now, FCX, what do they do? Let's pull this up for just real quick. Now, we've talked about historically AM. We've talked about NEM. We've talked about those. We talked about, what was this? Wheaton, I think it was called. Let's pull this up. Wheaton, yeah, WPM. We mentioned that yesterday. Now, one of the other stocks that we're going to really bring up is in that list. We've been chewing on this list for the last 2 weeks. FCX. Now, what you're now going to notice is if you pull up FCX, let's go to analyze for just a second. Pull this up for just a moment, okay? Now, when you look at Freeport-McMoRan, I mean, corporate-wise, they're based out of Phoenix, okay? But here's the thing that they have properties in North America, South America, Indonesia, and they're doing copper, gold, silver, and other metals, okay? Now, the biggest thing is when you take a look at this, they're all over the place as far as where those properties are. Now, if we scroll down a little bit, what you're now going to notice is, look at the difference when we talk about the consistency of the revenue. Big jump from 2020 to 2021. Now, you might ask yourself, well, what were those precious metals doing at that time in 2021? Little bit higher in 22. Little bit of a bump in actually 1584 there on 23. And you're going to see another bump. Now, you got to ask yourself, are they selling soap, Q-tips, toothbrushes, right? Pens, paper, iPads? What are they selling? Well, they're selling gold, silver, right? Gold, copper, right? All the above. And so you're watching to see what those prices are doing and saying, can it affect the sales? Now, if we take a look at this, what you're going to kind of see a negative of is those earnings per share have fallen, okay? And if you look at the last 3 years or so, the dividend's been flat. So when that company is actually not increasing the dividend, irregardless of revenue going up, earnings per share has been suppressed over the last really 3 years. Now, they might have had some expenses, right? But if that company's not raising a dividend, for some investors, that might be a red flag. Because if they're not raising the dividend, the company is probably not feeling too confident that the earnings per share might not be as healthy as where it needs to be to say, hey, we're going to commit to pay a dividend in the future. So sometimes people read into what that dividend is telling them. That dividend just stays flat for years. Company is saying we think we could do other things with the capital, and we don't want to actually pay out the shareholders a dividend. Other people look at that and say, well, that could be a bad sign of that they don't see profitability, okay, earnings per share increasing over time. So I think that could be a flag here for FCX if we're talking about someone that says, I want a dividend, okay? Now, we're not talking about wanting a dividend, okay? We're not talking about that. We're talking about trading it. Now, what we're going to do is if we go back and look at this, there's kind of been like a recent downward channel, right? Kind of was dropping like that. And then it actually broke to the upside. That little break to the upside was there, and it rechecked back to where maybe slightly lower than where the breakout was, and it's had a decent push. Now, why am I including this? Well, sometimes people say, hey, some of the examples we look at, they're higher priced dollar stocks. Could we look at lower priced dollar stocks? Well, let's look at one, okay? Now, a couple of examples when we talk about a target here. We got 47. We got probably right about the ballpark, maybe let's say 49, and then anything above that, 51. Now, if someone's buying or selling AM, NEM, FCX, and then Wheaton again, the WPM, you're not just looking at the stock symbols. If you're looking at the stock symbols only, it's like you're looking at the tail, okay? You want to look at the actual prices of what they're selling, okay? Like GC, SI, etc., to see what are the prices doing. No different than you would actually do with energy stocks and crude oil and natural gas, etc. Now, what we're going to do in this example is we're going to try to buy the shares of the FCX. Right click, we're going to go buy custom with OCL bracket. Now, what I'm going to do for time's sake is on this. Now, when I unlock that, what that really does is it snaps it to the current price, okay? It's allowing it to float with the current price. So 46.13. Now, what I'm going to do on this is I'm going to put the target right at 49.82. Some investors might say, can't sell there, it's too tight. The investor might be saying, could this go up a little bit higher? That's going to be about 49.82. Now, what I'm going to do is I'm going to kind of change that to GTC, dated GTC. We're going to keep it to 100 shares in this case. Now, if we went back and said, where was the last higher low on the chart? Well, if I looked at, let's say, where's that green dot? It's right there, okay? Now, some investors, they might say, James, I'm going to set my stop right underneath that. So in other words, if the investor gets out, they're getting out based on a lower low. I mean, lower low. I mean, that's not great. That means it broke support. You broke support, make a lower low. The greatest chance is a lower high. Okay. So that's why some investors say I'm going to get out if it takes out that price. $43 less 3%, it's going to be $41.71. So if I type that in right there, $41.71. Now that's being generous with actually how low the stop is. Some people like to set tighter stops. Some people like to set looser stops, okay? Now remember, in this case, if it goes up to that price, sell it. Goes down to that price, sell it. And the risk is there. On both of that, it could sell at that price or higher. And on the stop, it could sell at that price or lower. So this is not guaranteed it's going to sell out exactly at those prices, okay? Now, if we take a look at the question, so the comment really came from Mo, is a tilted up W. I think that's fair, okay? Now, where is that, okay? When you look at this drop down, right, little run to the upside, okay, there's the middle of the W, there's the pullback. So when you say a tilted up W, okay, we're talking, now obviously a W got two V's, but the thing is the V's are not like in line with each other. This bottom of the V, 2 compared to 1, it's higher. And if that's actually high, that's a higher low. If you get actually a higher low, we're questioning, can we actually make a higher high? In this case, it did. But many investors like to look for that pattern. Now, I always kind of say, look, I mean, that's a good start, make the higher low, right? But it's really about getting above the middle of the W. The middle of the W is right there. That lower high on the chart, that could really become over time the higher low. It's changing, okay? Think of that like an old level resistance that actually flips into a new potential level of support, okay? So in this trade example, what we're going to do is going to target here. Now, we could set a higher target. Wonder if actually gold, silver, copper goes up higher to the upside. Could we raise the target over time? It's going to be something we're going to watch, sure, okay? But at least initially, okay, got a target and a stop, confirm send, and now what you're going to see is we'll send that order. Now, one thing I want to kind of point out, and we're not saying that we're trading this, but if you said, hey, I want to kind of watch what those prices are doing, here's what it's actually showing. Now, this is for a certain expiration. We're not trading this, but we have to understand that the company has exposure to what these prices are doing. You got gold, you got silver, okay, and you got copper. These are the three main ones that some investors really watch if they're going to play something that is in that precious metal space. Now, I want to go back to something just real quick, a couple stocks. We saw Google today really had an announcement, a court decision, and Google has actually been on a tear. Now, when we talked about kind of the communication services, I'm going to tell you this right now. I think there's a lot of us over the years that we don't naturally think of the communication services sector. I just don't think we do think like that, okay? I know I haven't talked about it. It's been like the last 2-3 years, okay? But over time, we're starting to kind of see where there's more stocks that we're more familiar with. So I'm on the Market Watch tab. And when I pull up the Market Watch tab, then I go to Visualize. And on the left-hand side, you're going to see that we could pull up the S&P 500. And if you look at this patch right here, this is really showing the communication services, okay? Now, if you look at this, look how many of these companies we probably recognize. Okay, now you got Google L. Main differences in voting right differences on those shares. You got Meta, T-Mobile, AT&T, Verizon, Disney, Netflix, you name it, Electronic Arts, LYV, should know that, but I can't remember that offhand. You got Fox, et cetera, Comcast. So if you look at this, what I need you to kind of recognize is what two main ones, or probably 3 or 4. It's really Netflix, Google, Meta, and T-Mobile. Those are the main drivers, okay? Now, if you take a look at this, you know, today at least, it's really being Google. Now, the one other thing that's actually kind of helping a little bit, which we're going to kind of just finish on here, is it's also kind of coming into Apple. Now, Google was with Chrome. Apple has their superior Safari. I'm joking. I don't really use Safari. I'm a Chrome person myself. But if but if we take a look at this, you're going to see that Apple is getting a little push. Now, what you're now going to notice is, and I swear I haven't redrawn these lines, we've kind of been in a channel situation. Now, today, what you're now going to notice, if I zoom in on this, kind of a little, now we said yesterday we were going to watch this. We said that yesterday, okay? And it got a little push, had a little news here today, and you're going to kind of see that it's more in that green condition. Today, a little poke to the upside. When I say poke, we're just talking about something that's hitting a shorter term higher high. Now, if I went to Market Watch and I go back to quotes and I just pull up, let's say, the Dow stocks, you might wonder, well, how could I have seen that, et cetera, et cetera. If you're looking, let's say, for stocks in general that are hitting new highs, well, it's just looking at the 20-day high, which think of that as the 1-month high. Think of the 55 as more like a intermediate. It's like 2.5 months. It doesn't matter. Both of those are hitting here today. So if you pulled up your Dow list, you knew immediately they getting a little push here on Apple. Now, what I'm going to do is on Apple, what we're going to show is we're going to right click on this chart. We're going to go down to buy custom. Let me actually bring that paper money back up. Now, I'm going to show you the kind of the different way. You might be more familiar with this way. Fine. We can play both ways. Okay. Now, what I'm going to do is I'm on the trade tab. And what I'm going to do in this case is I'm going to right click on the ask price. Okay. Right click on the ask price, go to buy custom. Now, not everything has to have a stop on it, okay? We're talking about entering and exiting. We're going to also put a target on this. If we did an OCO bracket, that's what that is, okay? Now, we're going to wrap this up in 2 minutes or less, and what I'm going to kind of just show just real quick is where the targets might be. Now, you might set yours a little differently, okay? At least initially, I'm going to set that target right at 247.88. Okay, that's really the top of the channel. Okay, now if we were going to kind of say, look, I'm going to set a stop underneath the moving average, that's at 230.77. Okay, now again, we like to kind of show giving more breathing room as far as the stop, 226.15, and we're going to leave it at this because we're at time. But what you're now going to notice is we got a target and then we got a stop. We're going to look and see, can the higher high lead to a higher low? You get a higher high, you get a higher low, that's the start of the uptrend, okay? Now, I'm out of my time here today. I want to give us a quick reminder that with what we talked about here, you can subscribe. If you go to, let's say, thanks for that, Live Nation, Barb. Yep. Seen it before, but it's just stumped me there for a second. Now, the biggest actually thing is you can go to this website, the link I sent to you in the chat. It'll take you to this page. If you have not subscribed, subscribe. It's free, okay? It's free to subscribe. That way you can actually see all of our videos. You can go to right where it says playlist, and it breaks down the classes by, we put them in a playlist. Now, also, just real quick, is I sent you a link, and that link is actually going to really show you a playlist for this class. So you could go back and really look at any prior class that we did, and you could kind of go back and look at that. Now, also in the chat, there's a survey link. It's 2 questions. And if you could fill that out, or as you fill that out, I'd appreciate in advance. There's just 2 questions about this class. We do read all those responses. We try to include your questions in the classes that we teach. Thank you in advance for that. Want to also say thanks to Barbara Armstrong. Stay tuned for answering those questions in chat. And also a quick reminder that we got Michael Fairborn coming up next on markets and sectors. And also remember, with what we discussed, it was done for example, illustrative purposes only. This has been the class on trading growth and value stocks. And stay tuned for Mike Fairborn coming up next. Take care. Bye-bye.